Well, today I was supposed to make a video that was not stock market related. It was supposed to be a personal finance video, but with how much red was in the stock market, once again, I am making a video talking about the current situation in the stock market. And it's been a while. It's been a while since I've kind of made this close of a videos near each other with back-to-back red days like this. Last time we kind of had these back-to-back red days was kind of 2022, which obviously is coming up to 3 years ago now. The last time I was kind of making these big stock market dip videos, and there's been a couple of times where I've had a couple of red dips and I thought, okay, is this the one where we do the back-to-back videos and it's not really materialized, like we've recovered most of the time? But this is the first time for a while where the dip is getting significantly a little bit bigger. Now, it's still a very small dip at the moment, but it is building up a little bit, which is interesting. We are starting to see a bit more of a significant pullback, which is what we're going to talk about today. Now, before we do get onto the video, I don't think you guys will care, but I'm going to tell you anyway. The last 3 or 4 days, well, the last 3 or 4 videos I've made on YouTube, I have had so many microphone issues, and obviously you guys haven't seen it. Sometimes the microphone's working, sometimes the microphone's not working, sometimes I have to try and edit the audio so it doesn't sound like I'm stood a million miles away from the microphone because the microphone stops working and then I have to use the built-in one. So today I have actually got a new camera, so I'm hoping the picture is a little bit better, which you probably won't be able to tell that much when it's me sat down, but when I'm a bit more to the whiteboard, it might look a little bit better. Not that you probably want to see my face any clearer, to be fair. I think I got a comment yesterday like saying, have I dyed my hair? And I actually looked at the video and I thought, yeah, my hair actually does look really dark, to be fair. It's not that I'm growing grey, maybe be the new camera. And I've also ordered a new microphone. So this is the first time using this microphone here, which is actually the first time I've ever used a wireless microphone. So we'll see how it translates. Let me know in the comment section. Like I said, I apologise because for this last 2 minutes when I've been telling you like a little behind the scenes stuff, half of you don't care because you're here for the stock market content. But anyway, I just wanted your feedback because obviously you guys probably see it more than me. But yeah, new camera, you probably won't be able to tell the difference that much. It's not that much of an upgrade. But the microphone's quite a big change, so let me know what the sound's like. Anyway, getting on to the video today. The stock market, yeah, we are entering a little bit more of a tumble. You can see here the Dow tumbles 1,100 points. Nasdaq drops 4.8%. Yeah, it is getting a little bit choppy out there. You look at the Nasdaq right now and, it is entering that correction territory. It's down 12%. The Nasdaq is officially in a correction. The index being down 10% is officially a correction. Helps if I actually get the correct stock chart up. If we have a look at the Nasdaq, yeah, down 12% at the moment. So yeah, significant drop, obviously in a correction. S&P 500, not as bad at the moment. The S&P is down, actually, it is a lot worse than what I thought. I thought it was only down like 7-8%. Yeah, the S&P is down 9%. So the S&P is very close to entering official correction, which would be 10%. So another 0.8% drop. And we are in a correction, which is normal, to be fair. I know we haven't really, in the last 2 years, seen a correction. I think the last time we had a correction was 20. Oh no, that didn't even enter a correction on that dip. Yeah, the last time we must have had a correction was actually 2022 then, which actually then turned out to be a crash. So it's been a while since we've had a correction, which is surprising because I think on average we do get a correction every year in the stock market, even though we've not had a correction in 2023, 2024, it is normal to have a correction, so it's pretty healthy, especially with how the market's been doing. Let's not forget how good of a run the market's been on, because at the moment, I noticed I had the 6 o'clock news on when I was having my tea about an hour ago, and I noticed even like the US stock market dropping made it onto BBC News, and I was like, wow, if the BBC News is even covering it, like the drop must be getting quite significant now, because they only drop it when the stock market drop gets a little bit steeper. And it's funny because like something like BBC News never cover the US stock market when it's been doing really well. They only ever cover the stock market when it's dropped, especially in the States. And I was looking at this drop, and I was looking, let's like zoom out a little bit, and like still on a year chart. I mean, that's the dip there that we're currently on, which when you put it into context like that, it's like, yeah, it's not really significant, is it? You look at the stock market, and for like the last year, we're still up 9%, which is the average return in the S&P 500. So, everyone's like panicking at the moment, like on the drop that it's currently on. And it's like, well, when you zoom out, it's not really actually that significant of a drop when you zoom about it, especially when you zoom out in the last 5 years. The last 5 years, the S&P is up 106% to that drop that we're being on right now. In the last 2 years alone, it's been a fantastic 2 years in the stock market. And the stock market's still up 45% in the last 2 years, which is just absolutely incredible. Sometimes with these sort of things, it's all about context. You look at the context there and you're like, yeah. When you look at the context, like it's still been, absolutely incredible run that it's been on. But that little drop, that little drop does cause so much fear in the stock market, and these opportunities out there. What I will say, I've got to say it. I was debating whether or not to put this bit in the video, and I thought, you know what, I am going to go for it. Bitcoin. I never really talk about Bitcoin. I'm sure most of you guys are aware. I'm not a fan of Bitcoin. I don't own Bitcoin. I never will own Bitcoin. I don't believe in Bitcoin. And maybe it's a little bit of a cheap shot from me right now to like have a go here. But for all the people that say Bitcoin's going to be something significant in the next few years, I totally don't agree. And people say it's separate to the stock market. Well, if it's separate to the stock market, why has the stock market dipped and then all of a sudden Bitcoin's dipped and it's dipped 28%? 100%, it's just an indicator of where the stock market is at. That is my opinion on Bitcoin. It will never be anything more significant than that. When the stock market's hot, Bitcoin will go up. When the stock market's down, the Bitcoin will go down. That is also my opinion. And if we have a stock market crash in Bitcoin, if we have a stock market crash, you watch Bitcoin. Bitcoin will fall in half. That's what will happen. And it's nothing more than that. And I apologize because I always try and avoid it because I don't want to get in too many debates about Bitcoin. But every so often people like ask me in the comment section about it. And I don't really talk about it too much because I already upset enough people on this on this YouTube channel without then having the Bitcoin fans like coming for me. And notice that I didn't even say fanboys. I was actually trying to be diplomatic there, and I just said fans. And that in my opinion, that's what it actually is. But you look at the stock market. Tesla, what a dip this has been on now, down 53%. Now this is the mistake that I've actually made in the last few days. Is I saw this kind of fear building and I noticed the fear building, and I even put this on the Discord and I even messaged a couple of people saying like, I'm actually really tempted to short Tesla because out of all the stocks that are out there, Tesla is the one that I think could drop the most because it has been on a run that significantly doesn't deserve financially, and it's probably one of the most overvalued, if not one of the most overvalued S&P 500 member in the stock market. And I look at it dropping this much and I go, why didn't I do that? But it is what it is. You always look at the ones that you miss and you go, why didn't you do it? Hindsight, it's a lot easier, isn't it? But yeah, a little bit frustrated from that point of view. I probably should have done it, but it is what it is. But yeah, you look at Tesla. That's basically given up all the gains since the Trump, Elon Musk rally, presidential rally, giving it all back. I think it's deserved. I think it was incredibly overvalued. And I think that's the case with some of these stocks is that, people are panicking about these stocks pulling back. But in my opinion, I look and I think, what else did you expect? Tesla went to insane values. It was, what was it, 200 times earnings for a company that just grew 2% and the net income was down 70%? Come on, let's be a little bit realistic here. And even the fair play to some of the Tesla shareholders, they'll point out right now, they'll be shouting on the video going, yeah, you know what? Yeah, it's pulled back, but we're still up 500% in the last 5 years, which is true. This is the thing. This is the thing sometimes with the stock market, and especially when you do the content, and even I'm a little bit guilty of this, and even some other content creators do it every so often, is that they'll pinpoint points in a stock market chart to back up their opinion. So for example there, I'm saying Tesla deserved to have the drop, but then you could easily make a case and say it's still gone up. But I'd say that, the recent rally for sure, this rally was just absolutely bonkers, and I think that's fair that that's kind of giving it all back. And I'd argue the case that, in my opinion, I still think Tesla is a little bit high at the moment, considering where the financials are, and there's a lot of hope in there for the valuation that you're buying up at the moment. Like Palantir, I actually don't have a problem with Palantir. I actually think it's a very good company. I had a problem with the valuation where, it was 400 times earnings. Even on a P ratio, it was 200 forward times earnings. Incredibly valued, in my opinion. And when that peaked to I remember thinking at $70, $80, I was saying, I don't think the stock can go up anymore. And sometimes when the hype is there you go. It did go up even more. And that's the issue sometimes if you're a short seller. You think, when is it going to, start falling down, I guess. You might say, oh, back at $82, this is the drop when it starts having those few days, and it did kind of drop and then boom. the boosters went on again and it went even higher. It's sometimes that's when you sometimes when the market's in the greedy mood, sometimes these stocks can just go absolutely ballistic, like Palantir. But it works both ways. When the stock market gets fearful and it gets really fearful, financials and valuations won't matter. They can send it down the other way as well, where they don't matter, and then you get the levels where you're at. You can buy it $6-7 and you go and make a ton of money from it. Unless you're called Sasha, then you panic sell it at $7. But that was cheeky getting that dig in there, wasn't it? So yeah, I mean, a lot of these stocks like Palantir, still a fantastic company. I just think the valuation got a little bit ridiculous, and no offense to anyone that owns Palantir. I hope you've done well and took some profit off the table. I just think the valuation was stretched. And I think that's the case. I think this is the case with the stock market quite right now, is that I think we've just had such a good 2 years, and hopefully you've made a lot of money from it. I've made money from it, and hopefully you've cashed in a little bit. And I think this is a healthy dip, in my opinion, for the stock market right now. You look at Robinhood, that's been absolutely slumped today. That's down 20% today. And same again, look at this for a pullback, 45% wiped off the value, and I just think the valuation went a lot, too high. The issue that you have, and same again, people point to Robinhood and you zoom out a little bit and go, yeah, for context though, it's still up 109% in the last year, which is fair enough, but it just went to too ridiculous value. And the problem you have something like a Robinhood, for example, is that the reason why they've done so well financially, because they have done well financially to get the share price return. The revenue is up 115%, net income's up I never said 2,953%. Financially they have crushed it. But the reason why Robinhood's probably dropping a lot more than the other stocks out there today is that the concern is that Robinhood especially makes a lot of money from when we're in a bull market. And the retail investors are going crazy. They're buying Bitcoin, they're buying any options. That's when they do really well. As we've seen previously with Robinhood, 2022, when 2022 comes around, it can turn very ugly, because if you go from a bull market to a bear market, no one buys anything on Robinhood. No one wants to buy anything when the stock market's down. Even though those are the best times to buy, Robinhood is a perfect... I like actually looking at Robinhood's earnings, because it's like a complete point out where the sentiment of the market is. So when Robinhood's doing absolutely amazing, we're normally near the top of the market. When Robinhood's financially doing absolutely terrible, it's probably the best time to be buying, because all the people on Robinhood, all them retail investors, aren't buying stocks when they should be buying it. So right now everyone's piling into Robinhood, buying shares left, right and centre at the moment, and that's probably a sign that we're probably a little bit overvalued. And the fear already, you see that fear, that little drop there already. The reason why that stock drop is happening already is because not only because Robinhood went to maybe a little bit too rich valuations, but people are already starting to price in, well, hold on, if we're having a market downturn, you know what people stop doing? In the downturn, people stop buying stocks when they should do, and they stop being active on their accounts. And the problem is that Robinhood is already starting to because it's already had the damage from 2022. It's already, some investors are already having flashbacks and going, but if this continues, imagine what the financials are going to look on Robinhood. And all of a sudden, you can't justify, I mean, it doesn't look too bad at the moment, but, them financials aren't going to start coming in. Those retail investors aren't buying the options, they're not buying the Bitcoin. And very quickly, that profit growth starts dropping. And, that profit starts dropping. It goes from 916 million down to 500 million, and that's on a quarter basis. But let's say 2 billion in profit, and the growth starts going. When you have 2 billion in profit and the growth's gone, that valuation can quickly fall. But what is this advert? But yeah, I think it's good. I think this stock market drop is very, very good to happen. And I'm not just saying that from a point of view where I'm in a good place, because obviously I've cashed in a lot of stocks. I'm in a good place because I've got a good cash pile. I'd say my cash pile is probably something like 20% at the moment. So I've got a healthy cash pile. And if the stock market continues to drop, I have a lot of cash I can deploy into the stock market. So I'm happy for the stock market to keep dropping. But there's that kind of element. But the other element is that I think the stock market in general just got a little bit overvalued. I think, yeah, we had a good 2023. But I remember going into 2024 and I was like, the valuations are looking okay right now. I think we could do okay in the stock market. But then the S&P 500 went up another 27%. And it didn't just go up because of the financials in the S&P 500. Those 500 companies in the S&P, it wasn't because they all grew the revenue and profit to deserve a 27% jump. It's because the S&P did do some of that, but some of it was metric expansion, and the S&P went to something like 25 times earnings. The S&P shouldn't trade at 25 times earnings. The average company should not trade at 25 times earnings. In the last 5 years, the average P of the S&P 500 has been 19. And that's relatively high, because before that, the S&P used to trade at like 17 times earnings. So that's also had some metric expansion as well during that time frame. But to go from 19 to 25 is absolutely ridiculous. So I think even this year, when I did my stock market predictions, my prediction was, I think, for the S&P to be like negative 10% to only 5% up. I put the S&P to have a bit of an underperformance year this year, because I just thought it just can't keep going up like this. Well, it can, but the worrying thing is that we enter more of a overvalued territory, and when we have that snap back in correction in the valuation, which will come, and maybe this is it right now, it's more aggressive. And the benefit right now is because we didn't go too overvalued. I'd say we're overvalued, but not too overvalued. The snapback that we'll have, in my opinion, won't be too bad now. And I'm seeing a lot of people at the moment pointing out to Trump as the reason why the stock market's dropping right now, and I disagree. Like, yeah, obviously there is concerns around the trade war. There is comments like, oh, we might go into a recession. There's the inflation environment at the moment, and interest rates, and there's all those kind of little concerns. But there's always a little bit of concerns, and this comes with experience in the stock market, and that sometimes when the stock market drops, right? The stock market drops, and people look for a reason for why the stock market drops, right? We can't just have a stock market drop for valuation reasons, right? Quite often people look at the stock market and go, well, the stock market's dropping because this and this and this. This is why the stock market's dropping. And, so sometimes, people putting all these blames on Trump, and it's like, well, hold on. Like, when Trump came into power, and this isn't like a video supporting Trump, because it's not that. But the stock market already rallied pre-Trump, so it's about break. Well, it's probably actually a little bit down before Trump actually get in. But always the market, investors and the market and the media always look for something to go down. And what they've done is they've looked at this right now and they've gone, oh, US stock markets are falling because of the trade war and all this. And sure, there's the concerns, but these concerns aren't anything new. They've always been around for a while, right? But it's never because you can't go in and you can't sell headlines if you're the media and go, oh, the stock market's dropping, because the real reason is it just got overvalued. That's what it is. There's always going to be a point where you look at something and you go, that's why the market's dropping. Let's go back to let's say July 2024 and the stock market starts dropping. Well, what's the headlines then? What's the headlines then? Because even then, the stock market was probably dropping because it needed a correction. It's natural for it to have a correction. What would the headlines be then? Oh, well, there was a little bit of weak job data, or they're getting spooked around some of the economic data out there. Or interest rates. Oh, actually, we're not getting the interest rate cuts that we're supposed to be having. Or we're concerned around Biden. Is he actually going to be is he mentally healthy enough to be the president? Whatever it is, you can always look at some sort of negative to kind of pinpoint to a drop, rather than actually going, it probably dropped because it deserved to drop. That's always something that I always look at the stock market. Like 2021. Yeah, you can argue the case in 2021. There's a lot of negative stories out there. 2022, sorry, when the stock market crashed in 2022, you got, oh, it was the Ukraine-Russia situation, and maybe that was some of the reason why, and the inflationary environment. Yeah, that was the concerns. But the thing is that we were also overvalued in 2021, and that was some of the reason why we did drop. And that always makes me laugh. It's like, there's always some reason why it drops, not actually, if we just stare at the fundamentals. That's probably the biggest giveaway of why we're in this situation, isn't it? In my opinion, the S&P is not dropping because of all these external factors. The S&P and the stock market is dropping because it's just gone up so much. We're a little bit overvalued. Stocks have gone up so much. Tesla's at 200 times earnings, and it's got a big weighting on the stock market. I mean, it's 10% of the S&P 500. That is one of the significant reasons why. Palantir, in my opinion, it's a good company. I think it went overvalued. And that's the reason why the stock market's dropping. But that didn't sell headlines. and that's always something you got to be really careful of. And the good thing is that, in my opinion, this dip probably won't last a long time, because we're not megally overvalued. We're a little bit overvalued, but we're not megally overvalued. And very quickly, this market, obviously we've already had a 10% drop, which is a nice little correction. But also in 2025, unless we get a recession, that could always be something that could change what I'm about to say here. I don't know if we are going to hit a recession or not. There's a crystal ball. But because of the earnings growth as well, the S&P is actually trading at a 19 forward times earnings. So in my opinion, and I know people don't like me saying this, but it's the truth. And I don't sell you, I don't sell you BS, is what I'm trying to say. Like other people on the YouTube, especially in the stock market scene, always try to sell you this dream and open up the videos with like Ferraris and, try to be realistic with you guys. And, we've had a crack in 2 years, guys. We've had a crack in 2 years in the stock market, but it's got to have a break. And hopefully you've made money in the last 2 years. But in my opinion, I've said for a while, the stock market, in my opinion, has to have a break. And for the next 12 months, you know what? I think the stock market would do well just to stay flat. And I know that's boring. I know people will get fed up. And there'll be certain people, especially some of the new investors that are just used to the market going up for the last, 2 years. But it's good for the market, because the valuation just got a little bit stretched, and just staying flat for the next 12 months. And even, the stock market's down like 4 or 5% this year at the moment. If it stayed down 4 to 5% this year, that's actually really good for the market. It's good for us investors, because we need that valuation catch up, and it'll stay there. The financials will grow on these 500 biggest companies in the world. And what will happen is the S&P will grow into that forward P of 19. The S&P grows into that forward P of 19. That's good, because where's the S&P normally valued at? It's normally valued about 19 times earnings, guys. And then the market's all of a sudden a lot healthier, and that'll be a very good place. And the thing is, well, is that this is the S&P 500, guys. So let's say the S&P 500 stays flat from here, which I'll be honest with you, if I was a betting man, now obviously I can't predict the future in the stock market in the next 12 months, I believe the stock market, like I said at the start of the year, will return somewhere between negative 10% to plus 5%. I think it'll be somewhere in that range, which will be very healthy for the market. And that'll be okay, because hopefully you've made enough money on the 2 years. Hopefully you've got the patience to just wait out for 12 months. If you haven't got the patience for 12 months, I don't know what you're doing in this game, because that's long-term investing. And let's not forget, guys, this is the S&P 500. If you're in the S&P 500, yeah, it could be a little bit boring, but the thing is that I'm an individual stock picker. And as long as the market kind of stays about where it is right here, this is where it actually comes a stock picker's market. And that's where hopefully someone like me comes into my own, where the S&P doesn't do much, like, 4%, 3%. But I would hope in that time frame where I can just pick those little stocks that are not ridiculously overvalued, and they continue growing, and the market might not send them majorly higher. But this is hopefully one of those years where I can really outperform the S&P 500, because I'd be able to pick those stocks that just have those little jumps up, where they're a lot more undervalued to the market, and they can afford to go up because they're not overvalued. I'd look at something like a Tesla. How much can that go up already at this sort of valuation? Palantir, Robinhood, I don't know. But I'm looking at something like HIMS, and I think at the moment this is like a forward P of 30. And if they have a year where they grow at these sort of rates, like they have been doing, could this be a stock that outperforms the S&P 500? Maybe. I'm looking at the likes of DraftKings, which is 25 forward times earnings. And if they do the year that they do, or what they're supposed to do, maybe that outperforms the stock market. Something like Google, which is down 5% today, which is 21 times earnings, I think 18 forward times earnings, and cheaper than the S&P 500, and the revenue's growing double digits, net income's up 28%. Is this one of the years where Google finally outperforms the S&P 500? Because it's a lot cheaper than the other S&P 500 stocks, and yet it's growing faster than them. Is this one of the years where it pays to be a little bit of a stock picker, where people look at Google and go, hold on, okay, this is one that we should be rotating into. AMD, this is now going to be 22 times forward earnings, 21 forward times earnings. And these guys are absolutely smashing their earnings as well. Mercado Libre, a little bit of a richer value because it's a growth stock, 51 times earnings. But look at the numbers that these guys have been doing as well. And and this could be one of those years where it does actually really pay to be an individual stock picker, hopefully. And that will actually, because I'm out of the index, this is particularly one of the years that, I really outperform it. Because the last few years I've outperformed the S&P 500, but I've not like megally outperformed it, a ridiculous margin. I've done well. I think I put myself down a little bit. I think I talked myself down a little bit then, to be fair. But I've done well. But you could argue the case, and you could go, yeah, you've got you've outperformed the S&P 500 by 10% a year, 15% a year, which is great, and certainly over a long term time period, that would really add up for sure. But a year where the S&P 500 is down like 5%, but then I return, let's say I'm able to get a 20% return, which I would 100% take from here. That'd be absolutely amazing. Or even a 15% return. If I had one of those years where I completely outperform the index, and then you go, well, there you go. That's individual stock picking, where the S&P 500 did nothing. Or in fact, it was red, and I was able to still sneak out a very good return. That's one of those years where you especially can say, like, stock picking wise, that I really did well there. So it could be one of those years. I don't know. I'm just kind of like throwing ideas out to you guys really while talking at the moment. But yeah, overall, like that's kind of my thoughts really. That is my thoughts on what's currently going on at the moment. Is that the stock market's down. I think it should be down. I think it was overvalued. I've said for a while it's overvalued. I've been selling stocks. As you guys know, I've been taking a lot of profit because of the money that I made in the last 2 years, which I'm happy I'm doing now that the stock market's going down. I've got a 20% cash pile. I'm available to go buy stocks whenever I want to go buy stocks, and I am buying stocks. I'm not going aggressive. I'm just kind of nibbling like 3 stocks a week at the moment. I don't know how long it's going to drop for, so that's the reason why I'm kind of just like nibbling away. If the market stays flat for like 12 months, I think I'll definitely have opportunities just to steadily deploy that cash, and that's what I'll do. My thinking is that if the stock market rebounds very quickly, I bought on the dip and I'll make money. So I'm a winner. If the stock market stays flat, if it goes down, then I can still deploy even more cash into the market. I'm just taking it nice, slow and steady. And obviously, like I said, I think the market deserved the dip. I'm buying the dip. I'm being cautious. I'm buying in slowly at the moment. Some of the stocks I think are deserving of a pullback. I think they got to rich valuations, and that's why they're having a pullback. And then identifying opportunities. I'm buying stocks that I reckon could outperform the S&P 500 in the next few years, and I'm looking at the valuation, and I think that the ones that I think are a good valuation, I'm nibbling away at, and I'm adding in, and I'm building up those positions, and that's what you need to do. You need to, if you haven't done it already, get yourself a notepad, a Word document, and just note down like, right, if the stock market drops 20%, what are the 5 stocks that I'd really want to buy? Buy the stocks that are your favourites, not just because you like the name or something like that. Buy the stocks that you understand the most, the stocks that you think are good valuations. Buy stocks at good valuations. Just don't buy a stock because it's undervalued. Don't if you're looking at Palantir and going, oh well, I really want to buy Palantir, now it's had a dip and now I want to buy it. Well, I'd argue the case. Well, just run the numbers on that. Can you make money at that sort of valuation? You might think you might, and you might go buy it. That's not for me to say, but for me, I'd be running the numbers on that, and I'd be thinking, can I make money off this? And that won't make my top 5 list because it's had a dip. But the stocks I like. Okay, like, Hims, DraftKings, Google, AMD, Mercado Libre. I'd be looking at them stocks and I'd be going, okay, I'm looking at, Hims and Hers at 35 forward times earnings, growing 70 to 80% a year. Yeah, I think I can make money in the next 5 years. And look at the stocks that are financially crushing it as well. Don't just buy a stock because it's down. This isn't a time to be buying stocks just because it's down. You don't need to be buying into, dead stocks that maybe don't have, the financials to back you up. Buy the stocks that have the financials to back you up. Look at the earnings and go, okay, these guys are dropping, the valuation cheap, but yet financially they're absolutely crushing it. Hims and Hers is an example. I'm looking at DraftKings, still crushing it very much on earnings. Google, I think the earnings have been absolutely fantastic, and yet the market isn't giving it any loving. AMD, I think when you've got 3 quarters where it's just gone from 18% revenue growth up to 22% revenue growth, up to 24% revenue growth, and I think next quarter they're expected to do like 30% revenue growth, and yet the share price has just gone in the wrong direction. Those are the best opportunities. Those are the opportunities I was buying in 2022. I was buying those opportunities in 2022, and the ones that I bought in 2022 when that happened is the ones that I made a ton of money on. So that's what I'm chasing. That's what I'm trying to chase anyway in this opportunity. And maybe chase is the wrong word, but I am adding into and building those positions as the weeks go on, and we'll see. When the dip, how long this dip continues, we don't know. We don't know if this dip's going to continue going down. We don't know if this dip is just going to flatline for the next 12 months. We don't know if it's going to rebound. All you can do is position yourself in a way that you win either way. Whatever happens, that's all you need to do is position yourself in whatever situation happens, you win. So if the stock market recovers from here, have you bought some stocks to make money from? Yes, you win. If the stock flatlines for the next 12 months, have you slowly built in the positions where, okay, you're not spending it all on day one, you've got money to go, buy the 1 month down the line, 3 months down the line, 6 months down the line. If the stock goes lower, have you gone all in now, and now the stock's 10% cheaper and you can't buy any more, now the stock's 10% cheaper? Well, then you've gone probably a little bit too early, and yet you didn't slow your buying down, and now you've not got the capital for it. So you just got to position yourself just to be that little in the right position to win. So anyway, it's half an hour long, and I've been talking to you guys for a while, but I hope you enjoyed the video anyway. It wasn't the video I thought I was going to do today, but it's always good to have these chats about where the stock market's at when it's a red day. I did them in 2022, and when we had, obviously this is nowhere near like 2022, but I did them in 2022, and you guys, I think most of you guys that did watch the video, really enjoy them during the time frame. It was a bit of like a mental point of view, like, stick through the dip, and who knows, we might be still making these videos for the next 12 months, and that's what we did in 2022. And as I said to you guys in 2022, as I said to you guys in the COVID dip, as I said to you guys in 2018 when the stock market crashed in 2018, one day the stock market will recover. One day the S&P will be at all-time highs, and we'll be talking about this dip. We'll be talking. I think if the market recovers from here, it probably won't be a dip that we remember for a long time. We'll probably brush it off. But if it's a dip that, let's say the stock market doesn't do anything for 12 months, or it goes lower from here, it might be one of those dips where we look back on and go, hey, do you remember the 2025 stock market crash? And the opportunities you have, and the stocks will be higher, and you were thinking, I'm glad I bought during that time frame. I remember in 2022, in the darkest days when, DraftKings was $8, Hims and Hers was $3, Google was it $100 during that time frame? Oh, it even went to $90. I didn't even realize it went that low. Mercado Libre went to like $600. I remember the videos they were making during that time, and I was like, one day we'll look back on this and we'll go, I'm so happy, I'm so thankful that I bought the dip. And obviously we got there. Even right now we're still kind of looking at some of those stocks, even though they're not as much as what they were up. We're still looking at Mercado Libre. I'm still up like 60% on Mercado Libre, and I'm still looking at those stocks thinking, I'm glad I'm still bought. And that's even on a significant dip. So there's nothing to worry about, guys. These dips are nothing to worry about. That is if you can do the long term mentality. You got nothing to worry about anyway. Right, I'm calling it. Thanks for watching, guys. Hit the like button. See you in a bit.